Hello everyone. So in my last video, I spoke about what is breakout trading. And so today I'm going to go a little more in depth and into the details. So first off, what is a breakout? So a breakout is when an asset price moves outside of a defined support or resistance level with increased volume. So essentially the important parts here is it's breaking above or below some kind of support or resistance, and you are seeing an increase in volume. Those are the two main components. So very, very simple. Breakout trading is quite common. There is literally an Investopedia page about breakout trading, how it works. It breaks it down. It's quite interesting. I would recommend you all take a look. They give you a few examples of what to look like. Now, in this video, we're kind of going to go in depth about what does a breakout look like? What should you be looking for? So here are a few common chart patterns that usually result in a breakout, and then we'll look at actual charts. But take a look. There are some really common patterns that include double tops, triple tops, double bottoms, triple bottoms, head and shoulders, reverse head and shoulders, and then you got all kinds of pennants, wedges, flags, triangles. They're all very similar in terms of the mechanics when it comes to the pennants, wedges, flags. It's all more or less the same thing. Again, I'll cover that in just a bit. Essentially, and there is also just sort of sideways consolidation, which isn't much of a pattern. However, it can result in a breakout afterwards. So these are some of the common patterns you're going to see that usually result in a breakout. They're important to kind of learn and be able to identify so that you can easily just kind of skim through charts and see which ones look good and then dive a little bit more in depth. And then here's what it actually looks like on an actual chart. So you'll notice here, I just took one that I'm familiar with. And so essentially what you see is you see a leg up, you see a bit of consolidation, sort of like a flag pattern, and then you would take the trade once it breaks, okay? And then you see kind of the same pattern here again. It repeats, it breaks out. So you see a big move up, and you'll notice here, look, you see an increase in volume. All right, this is a daily chart. You can go into more details, break it down to shorter time frames. But the point being is you're seeing a leg up, then you see some consolidation here. And notice how with the consolidation, the volume kind of drops a bit, and then you see an increase in volume once again, and we get a second move higher, right? Obviously, this one is kind of super perfect example. I tried to choose something that made it simple to see, but this is really the gist of it. And then if you wanted to go more in depth, okay, how do I enter and exit this trade? Essentially, once you have this pattern, you're gonna draw yours, in this case, your resistance, and you want to see a close above that. Now, I'm a swing trader, but it's kind of a day trade slash swing trade strategy where I will sometimes get out in the same day or take partial profits and sometimes hold for 2, 3, 4, 5 days at the most, I'd say. So what we're using is the 5-minute candle. Now, that may seem really short, but the point here is it makes it very easy for you to be able to get in and minimize your losses. So what are we looking for? This white line here, that was the breakout zone, right? That's what we were looking at. So as soon as we get a 5-minute candle close above, that's typically where we would enter the trade. Now, obviously, risk management comes into play. You don't want to lose more than, it varies from people to people, but for me, it's 30% on one trade, right? 30% is not of my account, it's of that specific trade, which usually results in 2 or 3% of your total account. So I would give myself some leeway, 30% down. And in some cases, if you have a breakout where it ran a bit before breakout, you could put your stop at the low of the day, or if you get a close on the 15 or 1 hour candle within, like back within the area it had initially broken out of. So those are different options you could use for stops. So typically low of the day, minus 25 or 30% on that specific trade, and or a 15 or 1 hour. I wouldn't go with the 15. I would go more with a 1 hour close back within the area it had initially broken out of, because it can retest it and bounce. And if it does, that's great. That's a sign that there are still buyers interested. And then typically you want to set your profit targets. I start taking profits at about 30% profits. And I try to split it into 3 even profit targets. So 30%, then I try to go closer to 100%, and I leave a few runners in case it really goes crazy, like you see in this case with Hive. It went completely haywire. It ran like crazy. Unfortunately, I missed this one. I was not in it. But you want to leave a runner in case it really goes haywire. And then, sometimes you'll make 2, 3, 4, 500% profits. So this is the basics of the breakout strategy. Very, very simple to execute on. All you need to do is essentially learn the patterns that you're looking for. So something along the lines of a move up, some consolidation, and then you'll see, so let's say here on the bullish, I don't like the name they have here, the bullish pennant, all right, or bullish flag is what most people call it. Leg up, some consolidation, and then some follow through. And then once it breaks back above that level, that's where you would enter the trade. And when you see sideways, essentially what you'll see is a move up and sideways consolidation. It could be following some news. It could be following good earnings. It could just be a technical pattern. It really doesn't matter. So yeah, these are the patterns you want to keep an eye out for and learn to recognize on a chart. Pretty simple to identify usually. And one thing, if you're new to technicals or you really want to step up your technical analysis, this is a book that I highly, highly recommend. It has changed everything for me. Even if you're not trading futures, it does not matter. This is the Bible, the encyclopedia. It is a very, very exhaustive book. It has all the technicals, an explanation as to why, an explanation as to the psychology behind it, what drives the move. And so a very, very interesting book, Technical Analysis of the Futures Markets, a comprehensive guide to trading methods and applications. My understanding is that John J. Murphy wrote the book himself because he was teaching a class at the New York Institute of Finance, and he did not have any material adequate enough. And so he wrote the book himself. It's an old book, but it's still super, super relevant. You should definitely take a look. This thing is amazing. I hope this helps. I'll be linking my first video where it kind of gives a brief overview of what the breakout strategy is, and I will make more in-depth videos as to how to execute. So more on entry, exit, profit targets, how to choose the proper options, because I specifically trade options. Now you can use this with futures, stocks, options, whatever product, Forex, but I'll be going more in depth about the options part of things in a later video. Hope you guys enjoyed. Thanks. Have a good day.